Welcome to another edition of Zacks Rank Buy. I am Brian Boland, and I'm the aggressive growth stock strategist here at Zacks. And I got two more stocks for your aggressive growth radar screen. And this week, I'm doing something a little special. I'm doing something that I was never able to accomplish in my academic career. It's getting all A's. Yeah, I was getting D's and F's, and I told my parents that meant I'm doing fine. But let's go to these stocks that have all A's. And our first one is Land's End. You might remember that for the catalog from back in the day. E is the ticker, retail and apparel. It's a Zacks rank number one strong buy. It's got an A for value, an A for growth, and an A for momentum, giving it a VGA, value, growth, and momentum score of A. So I never got straight A's, so I wanted to look at the two stocks that have straight A's. So it's a catalog shopping. I guess it's still a catalog shopping. Probably go to the internet site too, but you would get this fine apparel there or other things. Maybe even the Eddie Bauer edition of the Chevy Blazer. All right, we got a $515 million market cap. So we're a small cap and we're selling our goods online. Let's take a look at the numbers that we really care about, because that's what it's all about. Are you beating the number? And it's a beat, it's a miss, and it's a beat, and it's a beat. These are big beats, but here's our problem. As is the case with many retailers, we're going to lose money most of the year, but we're going to make it all up in that fourth quarter. So they report at the end, it's end of January. They did a little tricky thing there. Instead of year end, it's the end of January. So they get that full month of, December and January. So a little returns and that additional thing there. So that 25 cents ends up carrying them for the year, right? So we think, at least for now. So, but the idea is we wanted that quarter to be stronger, at least back then. So that was the miss. I'll also note here that the Telsey Advisory Group and Dana Telsey herself, writing research on the Land's End. Dana Telsey, senior Wall Street analyst covering retail, was the axe in the space for Bear Stearns back when Bear Stearns was Bear Stearns. Good to see she's still writing stuff. I had a buddy that used to work there. All right, estimates going the wrong way. 10 cents to 3 cents. That's the wrong way. But for this one, 50 cents to 55, that's the right way. And then full year, 30 cents to 37 cents, then 39 cents to 58 cents. Expecting a big retail recovery in Land's End. How about our top line growth? We're not going to see it this year. We're going to see contraction, 4.5%. Next year, we're going to see some growth, 2.2%. Kind of makes me wonder how this stock got an A for growth. All right, here's our valuation page, and 44 times earnings. I wonder how that gets a value score of A. That's incredible. But maybe it's because price to book is so low at 2.9 times. Sales are weak. Price to sales is abysmal, 0.36. We want to see that turn around. And margins obviously are razor thin here and staying just slightly negative. Not a lot to like in my perspective of Land's End, even though it's got all these good scores. All right, so the pandemic, we're all going to die. No, we're not. We're going to get stimulus like crazy. Stock quadruples, quintuples, 5 to 40. What a move. Boy, if you bought that dip and you got $5 and then you sold it up top at 40, 8 times your money, that USA all the way. It didn't participate in the tech wreck, but I guess it did. Tech wreck of 22. Not really a tech name, so to speak. And here we are. We're making a slow, steady comeback. And you got to hope for the comeback. I hope for success for everybody, except my haters. But they make me famous, so it's okay. They'll do fine. What can I say about this? The earnings are flat to trending higher after real bad revisions. So Land's End, it gets on my radar list because it's got all these A's: A for value, A for growth, A for momentum. Maybe we're learning a lesson as we're doing this, that all A's are not what I would want in my stock picks, but maybe somebody does. Maybe someone likes Land's End. All right, let's go to our next one. It's JD.com. And you would know this as a Chinese internet commerce supply chain play. It's a Zacks rank number one strong buy. A for value, A for growth, A for momentum. And here's the story: $62 billion. It's a big cap, and it's even paying a nice little divvy. You wouldn't normally see that in a lot of growth stocks. Growth stocks like to reinvest their money into their business, keep growing. So here we have a parabolic move higher in the stock. And this is when Chinese government announces a stimulus plan. And And there's been talk of another stimulus plan. And that's what has seen the stock dip a little bit from your mid 40s down to 40. They could very easily announce another stimulus package, but they did, the CCP did announce that package. They did do some of it. I don't know how much. But when you have government stimulus going to all the companies, the whole sector is going to rally, and that's what happened in all these Chinese names. So all A's. Let's take a look at the numbers for the JD. All right, you got a B to 7%, 15, 23, and 50. Bigger beats. So not on an absolute basis, unless I think that they have a little time of the year where their business gets up a little bit higher. 75 cents, 78 cents, $1.29. I like that. That's really showing off some strength there. Try to make the comeback trail, or at least reporting it anyway. Not a fan of Chinese stocks for the most part, if you didn't know. All right, $1.02 to $1.05. That's up. Maybe they just pulled a few cents forward because that 90 cents went down to 86 cents. And the full year just still hanging out at 397. And next year goes from 415 to 431. Maybe they're looking for more stimmy checks. Stimulus. Is there growth? There is growth. It's small, but we're on a gigantic basis here. 159 billion this year, 168 billion next year, 4.7% growth going to 5.7% next year. How exciting for them. All right, let's go ahead and take a look at the valuation. We're only trading at 10 times earnings and 1.5 times book with 1% top line growth. And also, like the other stock, Lands' End, we're trading at 0.4 times sales. And we have decent margins, 3% to 3.5%. But when you're talking about a gigantic base of 168 billion in sales, 3.5% is pretty good. I like it. Take a look at our chart. What's been going on? We're all going to die or not? I don't know. And from the pandemic and then stimulus is all over the world, they kind of just been sliding down. That's a long-term slide. We can see these earnings estimate lines have been telling us, like, you got to get on board. Maybe the earnings estimates knew that the Chinese government was going to step in here and say, hey, listen, we've had enough of our stocks down 30, 40, 60, 70% from all-time highs over a couple of years. Let's get in here. And that's what's more or less happened. And, will we see another one? And I think the next one would easily take it over to 55 if they get another stimulus from the Chinese party. But I'll just say this. I don't Chinese stocks, it's difficult. Big ones like this, you're probably safe. But small ones, the potential for fraud is very large, very large. And there's no punishment in China for the fraud, at least none that I've ever seen. So that makes it very difficult to invest in the smaller Chinese names. And therefore, I don't invest in any of them. All right, that's it for this week. Be sure to join me next week when I take a look at 2 more stocks for your aggressive growth radar screen. Until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.